Hi, AG² here. This video marks one of the several episodes surrounding the always dreaded two words in life: tax season. No one likes filing taxes, probably because it means having to provide all kinds of documents and personal information, all while knowing that there is always a chance of you getting hit with a bill by the government, in addition to paying whoever you've hired to file your taxes. It also doesn't help that it has intentionally been made to seem like it's impossible for you to do your own taxes without the help of a CPA. Two examples of this: daunting facts such as between the three primary sources of regulations and guidance, the US federal tax collection has approximately 77,159 pages. Or knowing that the digital players like H&R Block or Intuit, the company behind TurboTax, have in the past intentionally made their websites incredibly difficult to use, all with the intent to deter you from self-filing with them at zero cost, and instead paying them a premium to have someone file for you online. But I'm here to let you know it's not all that bad, and yes, you can do your own taxes with some systems of organization in place, and with the knowledge that I'll share in this series of videos. The reasons to give this a try is because of what I preach. Independence is empowering. Once you try doing something yourself at least once and succeeding at it, you'll then be empowered to determine if it is worthwhile for you to hire someone to do it, thus freeing up your time, or whether the savings are worth it for you and decide to continue doing it yourself moving forward. Hence the saying, #knowledge is power. In this first episode, I'll keep it simple. First, I'll cover how for the majority of us, filing our taxes is actually a fairly simple topic to wrap our heads around. Then I'll share how I prepare to file my own taxes starting January 1st all the way through the end of the year. In later episodes, I'll do a real-time walkthrough of me using TurboTax to file my 2023 taxes this year, with individual episodes that require more specialization, such as filing taxes when you hold investment properties or when you hold other assets, such as stocks with a brokerage account or cryptocurrencies, or whether you're a homeowner. If you've ever been curious about taxes and how to minimize how much of your hard-earned money is taken from you, consider subscribing to my channel so you can join me as I release future videos. Okay, let's talk taxes. There's a philosophical discussion to be had around if our tax system is fair, but I'll skip over this for now and focus more on what is directly in front of you and me, and that is 2023 tax season. So how do taxes work? I like to visualize it as a four-part system where each part will influence how much you owe the government back in taxes. The four parts are your personal details, your income, your expenses/losses, and any deductions. Now, when I say owe, I don't mean the time when you are told if you get a refund or if you must pay more. When I say owe, I mean as the year passes, day by day, week by week, every single way you make money will have a portion of it deducted from taxes already, or it will be taxed the following year. It's sort of like the phrase, there's an app for that. Well, the IRS has their own phrase, and it's, there's a form for that income. There's no escaping taxes. But let's review each of the four parts. First, your personal details influence how many deductions you can take, thus reducing your taxable income. Things like whether you have kids or dependents, or whether you are single or married, or whether you are paying for education, among many others. Your income influences how much percentage of every dollar you make will get taxed. Taking a look at the 2023 tax brackets, you'll be able to see, based on how much money you're making, what tax rate that will be taxed at. And this is not all or nothing, it's basically sequential. So let's say you make $80,000 a year, and if you're single, your first $11,000 is taxed at 10%. Between $11,000 to $44,725, it's taxed at 12%. And then anything above that $44,725, all the way up to $95,375, you'll be taxed at 22%, and so on. But the type of income is also a key factor that may influence that percentage that you owe. For example, if you own stocks or cryptocurrency and sell them at a profit in less than 12 months of holding them, then you'll pay short-term capital gains tax. But if you hold on to them for more than 12 months, you'll pay long-term capital gains tax, which is typically substantially less than short-term gains tax. Your expenses/losses might be a little less common for most and has different implications depending on the type of business or activity you work in. If you invest in assets that could result in you losing money, such as stocks or crypto, then any losses reduce your taxable income. If you invest in assets that the IRS deems as depreciating, such as real estate, then you get to deduct a certain amount each year just by owning that asset, as well as deduct certain repairs or renovations. If you have your own business or are an independent contractor, such as an Uber driver, for example, then you might be able to expense various items such as your vehicle, place of conducting business, internet, food, clothing, the list goes on and on. Lastly, your deductions. This is also vast, but it is heavily influenced by your personal details. Some of the most common deductions are as shown here in the image. OMG, right? Adrian, you said this was going to be the simple episode. Not to worry. Unlike in the past, today's online platforms such as TurboTax and or H&R Block have a very approachable system where you are navigated through a series of questions so that they can seamlessly identify what aspects of these 4 parts are most prevalent to your situation and ultimately how to minimize your taxable income. In a later episode, I'll take you step by step how I filed my taxes with TurboTax. So click on that subscribe button to be notified once that's released. I follow a 2-part organization system starting from January 1st so that once it's tax season, you can easily provide it all to your CPA, or as I'm encouraging you right now, to try to submit it yourself. The first part is relatively straightforward. It's around organizing all the sources of revenue/income and capturing either that year-end form that summarizes your tax implications per each source, or by keeping a track of it yourself. Here, let me show you how I do this for my revenue streams. As you can see, I have everything organized in a centralized Google Drive. This lets me not lose it and lets me easily organize it, and it's just easier for me to get access and update it every single day throughout the year. So you'll first notice it's all divided up by year. I started doing this in 2019 and it's worked flawlessly for me. So let's take a look at 2023. As you can see, it's basically just one location where I'm uploading a lot of PDF files. And so let's kind of go down, one by one, exactly what this looks like. The first part is all things related to my rental properties, my real estate. And then I have a copy of my business mileage, which is not a source of revenue. It is something I'll be able to deduct later though. And again, keeping all that here makes it easy for me once I'm doing my taxes. Next up, I have my health savings account, as well as which is part of the 1099 SA form. I then have a bunch of other 1099s, which is basically just another source of income, one coming from my business account using American Express. I have my W-2, which is basically what I get paid as an employee of my employer. And down here, you'll see that I also earn income by being an Uber driver. Check out my video up here on how I earned $6,000 of that income tax-free without sacrificing any aspect of my social or professional life. And last but not least, I've got some income that I gain using my Fidelity brokerage account. And here, what I'm going to show you next is a really powerful way of simply summarizing your income if you were to own rental properties. This is apartments.com. You might have seen a ton of commercials from it in the Super Bowl. And I personally love using them. For some context, I own 6 rental properties. And across those 6 properties, that can add up to around 15 to 18 tenants that I receive rent from. I'd hate to be able to track that myself. So with apartments.com, I can easily go over to create a report, select a property that I want, and then select the time period, which I'm going to select tax period and select 2023 and click generate report. And as you'll see, with a click of a button, I'm able to see that I have in 2023 for this particular property made $35,175 from rent. I owned 2 I-bonds from the Treasury. Whoa, I'm telling the IRS, you're only allowed 1. Okay, wise guy, that's true, but if you have your own business, such as an LLC, you're allowed to own an I-bond as an individual and per each of your businesses. Whew, That's a lot of revenue streams. Good news for you is that your return is likely going to be much simpler than mine because of that reason. The second part for proactively preparing is to track your expenses, one of the 4 parts of the tax system. Check out my Budgeting and Expense Tracking 101 video around a detailed overview of how I do expense tracking. But for this video, I'll briefly show you how something as simple as an Excel file can accomplish this for you. For example, one of my revenue streams is owning and managing 6 rental homes. By tracking all repairs, renovations, and utility costs, I'm able to use Excel to summarize all these expenses, enter this information, and reduce my taxable income. I'll conclude this video by encouraging you to exercise curiosity and do some more research around preparing for tax season. Be proactive, and if you don't have an organization system in place as I described, give it a try. Now, is a refund actually good? Before wrapping things up, I want to share one last piece of guidance. If you get a tax refund, that's the government's way of saying that you gave them too much money and they are returning it to you without you gaining any interest on it. In theory, the closer to $0 you get as a refund, the better, because that means that you received the maximum amount of your hard-earned money and either invested it or spent it during the year you earned it. Now, if you don't have a budget in place to keep you disciplined on your spending habits, letting the government hold on to it for you until the next year might actually seem like a good tactic to avoid spending it, right? But it is hiding an opportunity to elevate yourself by not addressing the lack of budgeting and financial discipline. If that sounds like you, challenge yourself to try to create a budget and practice holding yourself accountable to it. Easier said than done, of course. But check out my video on Budgeting and Expense Tracking 101 to get started. And let me know if you have any questions or thoughts on these topics below in the discussion or chat. That's it for today. In my next video series, I'll get my hands dirty and go through step by step how I use TurboTax to file my own taxes in 2023. Thanks for tuning in.